Good evening, this is John Locke, and welcome to the Locke in Your Success Trade and Market Update for September 15th, 2013. Before we get going, we'd like to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, any trades and/or results covered in this presentation may or may not be live trades. In the event they are computer simulated, we do the best we can to accurately represent the trades. Also, the risk of loss in trading options can be substantial, so please be aware of all the risks prior to placing any trades. And if you're watching this on SMB or YouTube, please come on over to our trading blog, lockeinyoursuccess.com, and join our mailing list. All right, let's take a look at the markets. Let's start with the NASDAQ. We were saying last week that we were very bullish on the markets, and we were expecting a breakout on the NASDAQ. We just didn't know when. Or we also stated too that there was a possibility the Dow may try to break down here, and if that was the case, that the bullish move would take a little bit longer. Well, we didn't have to wait long because the markets opened Monday and they just took off. So we got the breakout here, and we got the hard reversal on the Dow, and that also accompanied with the SPX breaking significantly higher. And as expected, the Russell made its bullish move here of 25 or so points last week, which is pretty aggressive for a week. Luckily, we kind of flattened out towards the end of the week here. We have our price target for the end of the month at the 1080 level. It didn't look like we were going to hit that for a while, but it's starting to look like it's very possible. So as of right now, I'm still very bullish on the markets. We had some news over the weekend, and the futures are up 13.20 so far. Not going to be good for our September trades. A move like that close to expiration, we'll have to see where the market actually goes and whether or not this holds or not. But if the futures hold this high, it looks like we're going to gap up over old highs, which really brings that 1080 level into a very high possibility at that point. Of course, I also wouldn't be surprised where the news we had is that Barry Summers has bowed out of the race for Fed chairman here after Bernanke leaves. Normally, I wouldn't think that that's going to call for a 1.5% gap up in the market in the Russell, but we shall see. You think something like that might sell off, so that does make me a little leery. That said, this is a perfect cup handle here. We got our retracement early last week. We're also over our head and shoulders neckline from our last pattern, which all very, very bullish signals, and all indicating the market's going to continue to rise. So we are continue to be bullish into next week. We're looking for an expiration level probably over this resistance level. We shall see. If we get the expected gap up in the SPX, which is about 17 points here, puts us up over 1700 over our head and shoulders. I don't know if that quite brings us to new highs. We shall see. It depends on how big the gap is. And on the NASDAQ, we're just going to simply break out to new highs. And on the Dow, this is going to put us up in the 15.6. We're going to be pushing new highs in the Dow also if this gap holds. So we'll have to wait and see if the traders come in and sell this in the morning. I actually wouldn't be surprised to see it sell off. Mainly because the Dow is so overextended. As far as the Russell goes, I mean, the Russell's ready to go. So if you look here, like I said, we've had our cup, we've had our pullback, and from here, this is set to go. There's really no issues with that, and I wouldn't expect a bullish move to sell off in the Russell. However, the Russell isn't the only one we're considering. We're also considering the SPX. And if we gap up to about new highs, you may have some selling interest in here. If you don't, that would be very, very bullish. But if we gap up and then pull back down, then we have our selling interest, and I would expect it to come at least down to this head and shoulders line here for a retrace before it bounced higher. And if we're looking at the Dow, a gap up into here, for me, we're still completing this U. The market's going to want to back off here a little bit. Certainly if we touch new highs, it's going to want to back off here a little bit because we're so overextended. So that's what I would expect there, which is why I'm a little bit leery of this gap. And the NASDAQ, like I said, that's just good to go. So we'll have to see. If we do just take off, it's going to be quite a run for the Dow. So not that we haven't had those before, because the Dow has had some really good runs this year. But that's generally what we're thinking. Bullish for the markets continued into this week. And let's take a look at our trades. As we were saying last week, as we're coming into our October trades, we're going to kind of shift over to going deeply into monitoring one trade and then just kind of basically touching on the other ones. I got a suggestion from somebody that, maybe we'll show the T-log of all the trades that we've been doing if we made any moves. Other than that, we'll just kind of show you where we are with it. Maybe just show the T-log and that's it on all the trades except for the one that we're really covering in depth, and then we'll go over the reasons for the adjustments and so forth if we need to make anything. I think that's a good compromise there, and something we can go ahead and do. But for now, for this week here, we're still going to kind of cover everything until we're out of expiration on the September trades. So let's take a look at our October V Condor first. This trade here has had a couple of small adjustments. We had these 1100 calls. We bought 2 of these back during the week. So if we come back into the T-log, we had on the 10th, which was Tuesday, we had a delta issue. I bought back an 1100 call. Then on the 9th, we had another delta, on the 11th, which was Wednesday, we had another delta issue. I came in here and bought another one of these 1100 calls. As of right now, this position is sitting right here. It looks very good, and what we usually would like to see this is for the market to creep, and I emphasize the word creep, up into this area. If we have this move or this gap holds overnight, it's gonna put some pain into this because we're gonna gap up to the 76, 1075. I'm sorry, probably the 1066 to 1070 area. And if that's the case, then we're going to put some pain in this. It's going to draw us down a little bit. As long as the market slows down, this really shouldn't be an issue with this. What's going to end up happening is we may end up buying a couple of these back, and from there we may end up actually repositioning the whole thing a little bit higher. And once we do that, chances are really, really good that this will work out very well for the month. However, like I said, we don't usually typically adjust this thing intraday, so we'll see what happens. We may gap up and sell off, if we even gap up at all. If that's the case, then we'll end up just staying here. But this is the position for now. We're still up some money. What are we up? About $1,200. So things are going well in general. If we switch over to our October Bearish Butterfly, this trade here has had no adjustments. The market kind of went down after we put it on, and now it shot back up again. It's drawn down about $380, not a big deal. Actually, I kind of like the gap and run for this trade here, because if it gaps here, and we go up to 1076, for example, yeah, we'll draw down a little bit, but the good part of this is we have some delta theta issues going on. We're going to end up rolling this up. We're going to end up adding a 1060 here at the money, and then kind of scaling into the 1080s, possibly having to roll that all the way to 1100. I think that'll be a decent trade for the month. That shouldn't be too bad. If you remember when we put this on, we knew we were coming into a support level. We talked about the patterns the market was making and how this wasn't the best entry. So this shouldn't be a really big surprise to anybody. But even so, I think the trade will still work out okay. I'm not that concerned about it. And let's take a look at our September V trade, which basically right now we're just simply waiting for this thing to expire. Our short strikes are way up at 1130. Our short puts are way down at 950. There's really absolutely no danger of anything happening here. One of the things I did do earlier in the week, if you look at back on Tuesday, I thought the chances of us exceeding 1080 this month were very, very small, and we knew we were going to expire it. So that being the case, I just went ahead and got the credit that I could out of it. So I pulled in $1.95 there. I sold off the put, pulled in another $155 there. Our current position looks like this. We're basically at expiration value, and of course the gap is going to do nothing to this. You'd have to run all the way to 1110, 1120 to even consider even having a problem here. So there's really no issues here, and of course you'd have to have a virtual market crash on the downside to bother us. So I'm perfectly comfortable with this, letting this expire into Thursday, and that should expire for approximately 37.87 profit, which is pretty much average for a V trade, maybe just slightly more. I mean, usually we pull about $3,000 or $4,000 out of these, and that's right in line with that. And let's see here. We got our September rock trade, which got a lot of adjustments this week. So we'll kind of go over that. We'll just kind of go to the beginning of the week here so that we can talk about where we started. So we were in an M3 configuration as of last week. And if you remember right, basically what I was saying here is that we were just going to keep this and expire it in M3 mode if the market kind of just sat here. Of course, and then if the market took off, we were going to reconfigure into a rock trade. And that's what the market did. I mean, it kind of really shot up here. So when I'm looking at my charts, I initially had a target of 830 for this. 1,080 for this. But I had something going on with my charts, and I'll show you what I had going on here. I had mistakenly, if you look at the charts earlier, I had mistakenly actually had this line about 3 or 4 days earlier, up here at like on Monday or Tuesday of this week. And I didn't know it. I thought it was on Thursday or Friday. And that being the case, I'm looking and making my projections and saying, there's no way this thing's going to touch 1080. It's just not going to happen. So, that being the case, I was perfectly willing to go into a 1030, 1070 rock trade and then scale into the 1090s, or being this close to expiration, I'm knowing I'll never scale into the 1090s, but maybe adding some verticals or something into the 1090. I probably would have tried to go get in 10 points higher had I known, or had I had this at the right place, but I didn't. So this being the case, I'm a little bit lower than I'd like to be on both this trade and the group plans trade. Kind of end up this way too. So let's take a look at what we got though. So we had the M3. Market takes off on Monday, and then Tuesday, let's just go up to the beginning of the day, Tuesday. Oh, and actually I did make an adjustment on Monday. It looks like I just put some 1020, 1030 verticals in here on Monday because the market was up. So I went ahead and did that. You can see I did 3 here in the morning, probably because of the gap up to control our delta a little bit. And then in the afternoon here, towards the end of the day, I did 3 more, for a total of 6. By Tuesday morning, we look like this. You can see we ran a lot of our shorts up here, and there's nothing wrong with this position whatsoever, except for I'm starting to pull past my long strike, and we're getting near expiration, and it's starting to outrun this. So I have a choice. I can come in here and I can start to vertical this out. I can go right into a straight vertical. There's a whole bunch of stuff I could do here. In other words, I could do something like this here and go around and dump this call off. And I could have went into some sort of a vertical type of thing here and just expired this if the market went up at 2,800 or 3,000, and maybe you get 5,000 or 6,000 if the market backs off. That's certainly something I could have done. I tend to be more aggressive with this trade most of the time, and that's what I did. So I came in here, and if we go towards the end of the day, I sold this position out completely, went into 1030 butterflies and 1070s with the thought that the market's really never going to reach 1070. So if you take a look at what we look like now, here we are. So nice rock trade configuration starting out. I'm just kind of waiting for my delta to get too high, and if it does it early enough, I can scale into my 1090s. And at that point, expiring up over 1080 would be fine. But being this close to expiration, you're not going to be able to scale into the 1090s. So that's one of the things, one of the drawbacks here. So we're going to have to, as the market comes up, we're just going to have to either roll these 1070s forward. We could probably do just the shorts. We really no reason to touch anything else, and or even add some verticals in here and extend us out a little bit. This trade should still be okay till 1080, but it could have been a real grand slam had I had my numbers right. But apparently I didn't, because if I had these shorts if I had this at 1040, 1080, that would be perfect. Really, there would be no issue whatsoever here this month. But this is going to cause a little bit of pain, especially if the gap comes up and holds tomorrow, because it's going to put us maybe even underwater with this. But again, not a terrible concern here. It's definitely fixable. So that is the rock trade for September. I'll give you take a look at the T-log here. I'd like to do that. You can see we made all the adjustments on the 10th, and really we haven't touched it since. So if you go to today, you can see the position as of Friday is up about $7,000, And with this gap up to 1070ish, we're going to lose a lot of that, which is, that's part of playing the game into expiration week. If you get into a big gap and you didn't plan well, which or you made a mistake in your planning, then you get drawn down. But not a big deal. Okay, so let's scoot over to the last trade we have on, which is basically is not an M3, but I'll show you what I got going on anyway. Now, one of these issues is I'm kind of trading this side by side with somebody who's terribly risk averse, especially to the downside, and we've been doing some over adjusting and so forth, which really pushed us into not really being an M3. And it's not the end of the world. It's just, this is what happens when you overtrade, okay? So, we'll take a look at this. It's a good learning experience. If we come here to our T-log and we go back to the 9th, we're sitting in this position here. There's nothing wrong with this position. It's perfectly fine. It's just not really an M3, that's all. So, we have, poor gamma trend and a lot of risk to the upside. But, we're not that concerned about it. We're still well within the 10 here. It's not really a big deal. Like I said, I don't have a problem with this position other than it's not really an M3. So we come here and take a look at the T-log. Towards the end of the day, we just started pushing this out. So we sold two 1040, 1050s. We sold another 1040, 1050 a little bit later in the day. Oh, I'm sorry. We sold three 1040, 1050s early in the morning. Midday, we did two 1050, 1060s. A little bit further out, we did another 1050, 1060. So basically, all we did is we moved our 1040s all the way to 1060, and that was it for the day. See a lot more. We have more 1040s up here at 1060. And all we're doing is we're just kind of controlling our delta numbers here. We're just kind of punching our tent out. Now, most months this wouldn't really be a problem, except we had 25 points last week, and we're going to gap up again this week. But which is kind of unusual. But it's not a big deal so far. So we come into Tuesday, and the market's continuing higher. So what I ended up doing is thinking I'm going to take advantage of that and thinking the market's going to top out before 1070, because like I said, I had the expiration date wrong. I figured I'm going to close down this side of this and roll it out to 1070, 1090 call spreads. And I'm going to go ahead and do that with a series of iron butterflies. I'm going to get rid of these shorts down here, and I'm going to sell all these longs and basically put them up to 1070, 1090. So I did that here. You can see I did 4 iron butterflies here. So we'll go to the end of the day. I took 4 of these long 1070 puts and basically made them short calls, and I covered myself with the 1090. And this is the position here, just kind of widening myself out. I'm picking up some extra credit and kind of waiting to see what's going to happen here. I'm hoping the market's actually going to slow down, maybe spend some time in here. I'll be able to take the trade off. That didn't happen. We continued up on Wednesday. Like I said, I started moving these up into here. I moved the other 3 1060s. I bought those back. I sold 3 1070s, and I did this with a broken wing iron butterfly. So I bought back 3 1060s, sold 3 1070s, sold 3 1070 calls, bought 3 1090 calls. So if we take a look at a T-log here, you can see that on the 11th, there's the iron butterflies right here. These 4 here, the iron butterflies, and then on top of that, I sold a 950, 1030, 930 put butterfly, and that basically brought us to the position you're going to see in a moment, which is here. You can see now that I have only on the put side, I have 8 long 970s, I'm short 6 1000s, I'm short 3 1030s, I'm still long 1 1070, and I have my long 1020 still from when we put the position on, and there's my shorts. So sitting here, I'm perfectly happy with this position. Again, expecting the market to top out before 1070, this wasn't that much of a concern. We were able to sit here on Thursday because we didn't really have much market movement, and now we're up over 2,000. And then we have Friday, which would have been a decent day to take this off. We're actually up close to about 5% here. And right at the end of the day, we started getting this push up, and of course I was concerned about what was going to happen over the weekend. You know, I've been pretty bullish. So I just did a little move here where I sold this 1070 put and I bought a 1060. So I just did a vertical spread right in here, right towards the end of the day, because the market did not back off by the end of the day. And we ended up, I'll show you what that position looks like, in this position here. So I was planning on the market to continue to go up this week, but I wasn't planning on a 15-point gap in the morning. But like I said, that may never materialize. I mean, the futures have a habit of selling back by the Monday morning, but we'll see what happens there. So as far as we are now, we'll have to see what we have for time value in our options tomorrow to see what we can do to correct this, depending on how big the gap is and where exactly we land. I mean, realistically, if we're under 10 points and we kind of stabilize, we may not have to do really anything here, except for maybe take off a little more upside risk in case we go up again Tuesday. However, you know, if we gap up into the 1070, 1075 area, then we're just going to have to recover ourselves, and we may end up, you know, bugging out of this for whatever we can get out of it. So that is basically all our trades. And like I said, this was not a good example of an M3 trade. That being the case, I'm going to try and make sure that I do a sample M3 trade that does follow the M3 rules, because we are tracking results and I want to get something that's realistic here. I mean, the M3 did not have any trouble whatsoever this month. I actually have one I've been tracking that is a real M3, so let me show you that. So if we scoot over here and show this M3, which this isn't a perfect example of an M3 either, but it's a whole lot closer than the other one is. You know, for the most part, most of the students made out very well with the M3 this month so far. And you know, you'd be looking something like this if you were in a real of an M3. Still kind of getting hammered tomorrow with this really hard up move, because we're going to have a drop in volatility here. And this is going to tend to collapse a little bit, but you know, still would have been a good month here. Would have been able to just, you know, take the rest of risk off in the morning and call it a day. So we're going to try and stay a little bit more in line here with the M3, because we want more accurate results than what we're getting with the way I'm fooling around with it, even if it means I have to, you know, do it on paper. So we'll go ahead and, you know, make sure we accurately represent that trade. So that's all I have for now as far as the trade goes. You know, the big gap up and a run would be bad for some of the September trades and possibly our V Condor for October. If that's the case, though, it does open. The good part about that is it opens up a lot of opportunity for our October M3 trade. Put on a nice position there at the, you know, up in the, when the market's up in this range here, because it's likely once we get up here, we're going to stay up in this range for probably the month. It end up at the 1090 level. So if we can get in here at, you know, 1060 or 1070 M3, that'd be a good trade for the month. So looking forward to that if that actually happens. For now, I'd rather have it wait a couple of days so that we can get out of our September positions and then move forward. But the market's going to do what the market's going to do. So that's all I have for now. Have a great week, everybody, and we'll keep you updated with any changes. Thank you and good night.